We're ready for another day and another highlight. Did one like this because it happens a lot. I just like the cleaner ones and the ones that should be, they're not obvious. By watching these videos, coming to the room, being in the room, they become more obvious. All right. Compare contrast. You got the NASDAQ chart on the right. This is the NQ. It could be a BMW, and these are Mercedes-Benz. It doesn't matter as long as there's a compare contrast value. This is the NASDAQ. This is the S&P, the ES, right? They're going to chart similarly because they're both stock indexes. I want you to watch here and here at not price or pattern, just direction, all right? I'm going to go one bar forward, and you see, let me open this up a little bit. There we go. Do you see how, it was back here, right here, how they both go down with a pretty decent down bar, right? Take a look at this. Same time, right there. They both get hit. They both go down. Well, guess what? That should happen. There's no clue when something happens that should happen. If a guy's playing poker, doesn't change his disposition, he doesn't have a tell yet. He changes, there could be a clue. We're detectives. As traders, we're detectives. So when things happen and they should happen, there's no clue, don't jump the gun. Now watch as I go forward with the price action. They just, NASDAQ had to jump on me. Hold on, let me bring it all back. I rolled the wheel too fast. Got excited. So let me just go over this. This bar right here that went down in the NASDAQ is this bar right here that went down. Okay? Now, watch what happens with this bar right here. This is another big down bar, but in the NASDAQ. Let me go one at a time. One. Do you see the ES breaking? Now, the ES broke nice when the NASDAQ did this over here. The ES did this. But on this down bar, you didn't get that same downside reaction. So if there was an indicator that was like a hand that came out of the screen and slapped you upside the head, you'd say, oh, what? I must need to pay attention to something. The NASDAQ did something that the ES didn't respond to. It's just a probability that the downside is probably the wrong side in the ES, and there's a bounce coming. I don't know if the bounce is going to be 3 points or 30 points. But you're not going to get good at making 30-point predictions unless you're good at making 3 5-point predictions. And this is a great clue finder. But if you're not comparing and contrasting, you're in trouble. And most people who trade a product, they trade one market, they analyze the hell out of that market, and they're ignoring other markets. You have to embrace that notion. You embrace that notion when you buy plane tickets and cars and houses, but you ignore it when you trade the price of crude oil, stock indexes, stocks, whatever. It has a price attached to it. Since the beginning of price, the invention of prices, you value it by one technique of comparing and contrasting. I often say, and I said it in other videos, if it wasn't for ugly people, we wouldn't know who's good looking. And that's the point. You got a second down bar right here in the NASDAQ, right here, and you didn't get it to go down again in the ES. And so what happens is I go forward, they do jump. And they jump 4 points. And they end up jumping about 6 points. It wasn't all the way back up to the highs of the session, but it's good to know it in here that it didn't react, and it should have. So to summarize, when something happens and it should happen, there's no clue. When something doesn't happen and it should have, Maybe the market's lying to you. Maybe the kid's lying to you. You're detectives. We're detectives as traders trying to find out where there might be clues to tell us there could be a pop coming. Why? Well, because, you know, when you get that big of a break in the NASDAQ, you usually could come off a little bit in the ES, and it didn't. But you can't figure this stuff out after the fact. The only reason why I'm covering it now is because I said this in the room at 38.5 when it was down here, real time. But if you don't know what you're looking for, you're not going to identify it. That's important. A lot of people are driving down the street. They don't know what they're looking for. At least know what the guy looks like, dressed like, what's his height, maybe his weight. Now you have a chance of finding him. You have no chance if you don't know what you're looking for. And so keep yourself apprised to compare, contrast the technique, other markets. And another rule of thumb is when you're comparing and contrasting, they work better when a price of a product moves faster. They work better when the price of a product moves faster. The faster it moves, the more it moves, and you're like, oh, wait, you get a reaction. We're not getting it. Huh. So just keep that in mind. This is one of the concepts that nobody teaches. Go do a Google search, an internet search on intermarket correlations, day trading. Nobody's lined up to teach it. You know why? Most people don't know it, understand it. But if you would challenge the value of comparing and contrasting like markets to value price, then when you go into a car dealership next time, don't go to two car dealerships. Just trust the salesman. He's giving you a fair price, and then bring in a profile chart and tell him that it's below value area of yesterday. And also here's a Fibonacci where your 618 retracement from the last highs, and see how that works for you.